Are you interested in learning how the proceeds of a reverse mortgage can be integrated into your retirement portfolio? In today's video, I'm going to walk you through the basic concepts we use to help determine how to best position equity within the context of your retirement portfolio. And remember, always be sure to check with your family and a licensed financial professional before you make this or any other major financial decisions. Now sit back and get ready to learn the truth about reverse. Hey, if this is your first time here, be sure to like this video, subscribe to the channel, and tap that bell for notifications so that you can keep learning right along with us. And if you have any questions about reverse mortgages, you'd like some additional information, perhaps you have a friend or a family member that has a reverse and you have some technical questions, I'm always available. My contact information is in the description below. Please feel free to reach out and I'll answer any questions that you might have. Those over age 62 have amassed more than $13 trillion of home equity, and it mostly sits idle during retirement. My name is Brian McRae, and I'm here to change that mindset. Because although reverse mortgages aren't for everyone, a well-designed reverse mortgage can be a very powerful financial tool to help you thrive in retirement. In today's video, we're going to talk about how the proceeds of a reverse mortgage can be actively integrated into your retirement savings or your retirement income portfolio. These are concepts and conversations that you can have with your financial advisor, and your financial advisor can help you determine how best to position this home equity within the context of your portfolio. Now, I want to be very clear here. I am not a fiduciary. I'm not a financial advisor. I am a licensed mortgage loan originator here in Texas. And so my advice is going to be centered around how you can make equity available. And then I'll talk about some options about how this equity can be put to work. But it really is up to your financial advisor, the fiduciary, to help make smart recommendations that are specific to your retirement portfolio. If you talk to most financial advisors, home equity is largely ignored from long-term financial planning and retirement planning. Most financial advisors even lack the process or the software capacity to even integrate home equity into the plan. And this is the case, I think, for a couple of reasons. The first one primarily is up until about 10 years ago, with the advent of the home equity conversion mortgage, financial advisors didn't really have an instrument that allowed them to meaningfully interact with home equity. The reverse mortgages from back in the 70s and 80s were very crude instruments. They were not designed to be as much a planning tool as much as it was a reactive tool to help you get equity out of your house in the moment quickly. And so the attitudes towards home equity and the attitudes towards reverse mortgages were partially formed by the fact that there really, up until now, wasn't a meaningful instrument to do so. And then, of course, you have the negative connotations around reverse mortgages because of the way they were implemented back in the 70s and 80s. And some of that attitude still filters through today. And there's also, I call it a social cost to using home equity. Most of us are very reluctant to touch it. The idea is that home equity represents the Alamo. It's our last source of wealth. We're going to hoard it and pass it down to our children. And so this idea, and coupled with the recommendations that we made to you, to your parents and grandparents to pay off their homes, has resulted in this $13 trillion pool of wealth that now largely sits idle because there really hasn't been a meaningful instrument to interact with it. And also social norms have prevented us from even viewing home equity as a viable source of funds to be integrated into the portfolio. But $13 trillion is simply too big to ignore. That's twice the size of all the 401k balances combined. And so the fundamental idea that that much wealth should sit idle in retirement, that's the mindset that I'm attempting to change. And the central idea is now with the home equity conversion mortgage, you do have an instrument that allows you to meaningfully interact and reposition home equity. And so when you couple that with the expertise of a financial advisor who, number one, is a fiduciary, number two, understands your retirement planning goals and can figure out how best to integrate that home equity within the context of that specific retirement portfolio. And that represents all sorts of opportunities to reposition risk, maybe to change your product mix, because now we're bringing this pool of wealth that you were previously ignoring, we're bringing it to bear and putting it to work in your portfolio. And please understand, when I say putting it to work, I don't necessarily mean spending it, because taking advantage of the line of credit growth over time is a real way to build liquidity, and you are, in this case, just positioning it for later use. And so one of the first things that we need to do is just to work on our mindset shift and work on the understanding that home equity represents simply a different pool of wealth. And as our pools of wealth, like your portfolio, your stock portfolio, your 401k, your Roth IRA, your traditional IRAs, life insurance policies, every one of those pools of wealth has rules associated with it. It has costs associated with it. It has penalties in some cases. And there are benefits to using those pools of wealth, and there are benefits to sometimes not. The home equity conversion mortgage allows us to think of home equity in that same way. It is a pool of wealth that has rules associated with how it can be used. It has costs associated with when this wealth is used. And sometimes, as a financial advisor, as a fiduciary, it might make sense to draw down this asset and pay the long-term interest as opposed to drawing those funds from some other source in the portfolio. And so this idea of positioning equity means now a financial advisor can meaningfully interact with this equity from a planning perspective or from an execution perspective. Gives them another lever that they can pull within the context of your retirement portfolio that they didn't have access to before. So it's a very powerful instrument, and it comes at a time, if you are near or in retirement, when bringing that amount of wealth to bear can really alter the course of your retirement over the long run. There are two potential paths to the value of integrating the home equity conversion mortgage into your retirement portfolio. And the first path is using the line of credit. So think about a paid off home. You would get a home equity conversion mortgage to make a portion of that home wealth available via a line of credit that grows over time. And so that long-term growth feature is how and what a financial advisor can use to be able to forecast how much liquidity you will have available over time. The second means is using a home equity conversion mortgage. And if you're among the 60% of retirees who are still making a payment on a traditional mortgage, replacing that traditional mortgage with the home equity conversion mortgage. And with the home equity conversion mortgage, monthly payments, the principal and interest components of those payments are now optional. Now, you still have to pay your property charges, you still have to pay your property taxes, your insurance, your HOA fees, but now the principal and interest components of that payment are now optional. And so that all by itself can save thousands of dollars a month in monthly cash flow. That again allows the advisor and you to reposition your wealth to be able to take full advantage of that. I've personally seen how profoundly lives can change when we put a well-intentioned and well-designed reverse mortgage in place. It truly is an opportunity to shift a massive amount of wealth at a critical time. And the opportunity within the financial advisor world is even bigger because by and large, financial advisors represent a very skeptical audience, and most of them don't even consider home equity as part of the active retirement plan. And so think about doing this in the collective. Think about changing the mindset of a generation of people that would allow us to now tap into $13 trillion of wealth and how many people's retirements we could elevate by simply changing our minds about how home equity is used. This is why I spend so much of my time in education. Fiduciaries, financial advisors need to be educated about how the home equity conversion mortgage really works, the features that are available, and some of the strategies that we can put in play that will help their clients live a better retirement. But it takes all of us. It takes financial advisors. It takes you, the borrower client. It takes us as lenders to be able to educate meaningfully. But the overarching theme here is changing the mindset, changing the collective mindset of a generation of people allows us to tap into a very large source of wealth that we were previously ignoring. Good advisors, real fiduciaries, will consider any option, any viable option, if it makes or saves their clients money. Even if there is an institutionalized bias against whatever product or service they're considering, if it's the best thing for the client, a fiduciary's job is to consider it and consider it meaningfully. And so a good fiduciary understands risk, they understand opportunity, and once they understand the mechanics of how the home equity conversion mortgage works, and understand that the instrument was designed to allow you to meaningfully interact with home equity in a very secure sort of fashion, A good advisor, a good fiduciary will instantly understand how best to position home equity using that particular financial planning tool. It's really important to understand in my world, as a licensed loan originator, I don't look at the home equity conversion mortgage as a transaction. This is one of the many things that I've discussed because the reverse mortgage isn't always the answer. And even if it is the answer, it might not be the answer at this given time. And so I consider myself more along the lines of a home equity advisor. I can help you plan and position home equity according to wherever you are in retirement, and also within the context of your retirement portfolio. So in today's video, we talked about some very basic concepts about how the home equity conversion mortgage and the proceeds of it can be actively integrated into your retirement savings or your retirement income portfolio. Now, we are just scratching the surface. I can guarantee you that this will be a topic of many conversations and many videos here at The Truth About Reverse. I would be on the lookout for a playlist, an entire playlist dedicated to how advisors can interact with home equity. In our next video, I'm going to get a little bit more granular and talk about the payout options. I'm going to talk about the different ways you can take disbursements from that line of credit once you put it in place. Until next time, keep on learning the truth about reverse.